Welcome everybody. My name is Martin. I'm one of the authors of the Builder's Guide to the Tech Galaxy. And together with my co-author Thomas and a team, we've created a knowledge base on how to turn a small startup into a thriving unicorn company. When you do this transition from startup to scale up, you will need one thing, and this is a lot of money. So you need to convince growth stage investors to give you this money. Here are the 6 questions most growth stage investors will ask you. Question number 1, fund fit. So does your company fit the investor's fund in terms of industry, size and funding needs? So this one should clarify very early. Are you in the right region? Are you in the right maturity stage? Are you in the right industry, or do you have the right business model? Does the fund have enough unallocated money? To clarify this very early helps to save time. Question number 2, is the timing right? Why now? Does your business swim in a blue ocean with trends in your favor, such as customer behavior, technology, regulation, capital trends? Question number 3, market potential. Is your so-called serviceable available market worth more than $1 billion and is it not overcrowded with competition? The serviceable available market is the market share of the total addressable market that you can capture as a company and should ideally be above $1 billion. And in your market, you should not have a lot of well-financed other larger attackers. Question number 3 is on category leadership. Have you created a defensible solution that is 10 times better than any other in that market? So do your products and services solve customers' problems 10x better? That's one of the key questions of many investors. And do you have a defensible position, i.e. can you leverage proprietary data and technology, a network, trademarks, some insights or unique skills? Question number 5 is on the business model. In the scale-up phase, you can already look back on certain business metrics. So many investors will ask, does your company's performance to date show a path towards becoming profitable in the long term? And there are some key results absolutely of essence to investors. First, the rule of 40. Add up your revenue growth rate and the EBITDA profit margin, and ideally you are above 40. Then the so-called net revenue retention, which measures the amount of revenue you can get out of your existing customers, including upgrades and downgrades. Ideally, this is above 120%. Then customer lifetime value divided by average customer acquisition costs. Ideally, your customer lifetime value is 3 times higher than the average customer acquisition costs. And then if you're in a B2B business, your sales cycles are ideally short, i.e. you can sell on average below 12 months. Question number 6 is on team. Have you assembled a great team that can scale? Here, clarity of thought on direction really matters. We've done another video on that one. This is about creating an attractive North Star. Then, does your team have a scale-up mindset to step up from a do-it-yourself executive into a chief company builder? Is the team diverse in thinking and complementary in skills? And finally, are they resilient enough and determined to make a mark on the world and deliver a step function of better customer experience? And there you have it. Here are the 6 key questions many growth investors will ask. Have great answers to these questions and you will get enough money to turn your small startup into a large and thriving unicorn company. If you want to know more, follow us on LinkedIn, YouTube, and go to our website www.buildersguide.org.